Yeah, hi guys. Welcome to the webinar. Sorry, I'm a little bit late. Just been sidetracked by something this morning. I did put a reminder in my diary, but as I said, I apologise for being late. My name is Ian Coleman. I'm one of the traders and analysts at First of Trading. We're a trade recommendation and analytical company. Okay, based in London. What we're going to do today is we're basically going to look through as many currency pairs as we can, break them down through time frames, look at what chart patterns are emerging, and mainly look at the long-term outlook for the major currency pairs. So where we should be looking at re-entering some of these aggressive downward moves that we've seen lately. I'll run you through what I do most mornings, okay, but I mean my working day starts quite early. I start at 4:30, 5 o'clock UK time. First thing I do is look at the dollar index, okay. It's the main driving force of the majority of the major currency pairs, as we know. So if we can get a handle on that, so if we can get a good feel for where the dollar index is going, then we can work that through correlation of other currency pairs, i.e. euro, sterling, euro, yen, to work out where a lot of the majors are going, euro, dollar cable, dollar Swiss, etc. So I've broken down, I have done some work, okay, some of these sort of last moves in these major currency pairs in the dollar index, and we're going to talk about, people talk about medium to long term. Okay, we're going to talk about what I would call short term, which is intraday trades. Okay, can we get on some of these major moves and try and bleed some of our positions? In other words, leave them to run for the long term. Are we counter trending at the moment? Should we just be looking at scalp? And basically the long term outlook. We've just written a report for the Forex Journal for the July issue, actually, on all the major currency pairs. So we will go through everything that we talked about there. So, like I said, the dollar index first. Now, the dollar index has been in large consolidated triangle formation for, well, really since the start of 2008. Aggressive reversal candles under the cloud. And then basically what we see now is what happens in a consolidation triangle formation, even if we look at a large time frame all the way down into the 5-10 minute time frames. Obviously the range gets smaller and smaller as we get towards the end. And what you should note here is that the support and resistance levels get weak because of this volatility in the index. So you can note here that obviously at the start we had great resistance to the upside because we had a decent downtrend, and then basically the cloud goes virtually flat. Okay, so there's not a lot of support and resistance internally in this symmetrical triangle formation. What we can note though, and what we did note in this report, was this midline. Okay, so we've got a midline at 80.26, which also lines up with the cloud base, and this level here. Now, this level that we highlighted was 80.58. Now, that's a Marabuzzo level. So, a Marabuzzo level, what we're looking for is a strong candle formation, either bullish or bearish, and the Marabuzzo level is the midpoint of that strong candle. Okay, so the open and the close, add them together. Quite simplistic really, and then divide by 2 and it gives you the midpoint. So the midpoint of this Marabuzzo level was 80.58, okay, and we actually ended up making a low, where did we make the low? Of 80.50, okay, so on the dollar index it's pretty close. So we were looking very, very closely at that dollar index for buying pressure around that 80.58 level. Now, if you can note, we're only 2 days into this month, but last month that upward pressure basically resulted in all of the previous months' decline in the dollar index being reversed, and it was aggressive, it was quick. Okay, so it might have taken 3 weeks, not quite sure how long it took actually. It took about 3 weeks for the decline to happen, and only 1 and a bit weeks for that decline to be overturned. So now, basically, for the dollar index, or from that point, from that 80.58 level, the bias now turns bullish. Okay, and we eventually expect to break to the upside. Support obviously coming in from the symmetrical triangle formation around about 86.50. A break there, and we'll go up to 90.11, and that's a measured move. Okay, so this is the AB leg, and then we take the low, so we take the length of this leg and then project it from the swing low, and that takes us up to 90.11, and that in turn is a previous resistance level. When we get to that point, just have a quick drink of water. When we get to that point, that will then form an ascending triangle formation, and we'll expect some pullback probably around to the level that we're at the moment. So medium term, and that's what this webinar is about today, medium term is for dollar buying, but there are also, there's always buts, there is also some reason to be cautious around current levels. Okay, and if we go down to the 4-hour chart, this breaks down the last move. Okay, so we had quite a decent sell-off. Okay, then a choppy first wave that made up to 261.8%, a very small correction. Okay, and then this push up to 83.58. Now this is slightly delayed. This dollar index chart, I think it's delayed by 15 minutes, but this was virtually perfect. Okay, the ABCD formation. We've also got a previous high coming in here at 83.32, and we're gyrating around this candle. And what we should also just open up a bit, okay, is that the last 36, probably 42 hours now of trading has been inside this large bullish formation. So these are all inside Arami candles, okay, and they show investor indecision. So at the moment, until we get a breakout of this range, of this 6-hour candle range, okay, and the low 82.97, the high is 83.60, so it's a wide-ranging candle. But until we get a clear breakout of that candle formation, we should expect intraday trading in the major currency pairs to continue to be quite choppy. My bias at the moment, and technical levels aren't strong, my bias at the moment is for a small pullback towards the base of this strong candle formation, and then I think we'll break to the upside. Okay, so the medium term bias is bullish, short term bias is very mildly bearish, but looking to buy into dips, and reflecting that back into the major currency pairs. Okay, because obviously that's the opposite of what we're expecting euro dollar to do. Euro dollar has had a strong sell-off with this dollar buying. We should then see it gyrate a little bit, and I think probably for the next 2 to 3 days. Got to remember we've got a New York holiday on Thursday, so that's going to be probably pretty lackluster day. And then next week, I think we'll get some decent breakouts. Okay, so that's the dollar index, and then we're going to look at the major pairs. Okay. Any questions about the dollar index before we go on to the majors? Because I'm 10 minutes late, I'll try and not rattle it through, but could well do. Yeah, I mean, I think we're going to see a lot of dollar buying in the near future. I think the euro is probably the weakest of all the. I think the euro is probably the weakest of all the currency pairs. I think euro sterling is looking quite nice for a short today. In fact, I'm short of it, but anyway, I'm digressing a little bit. So this is the big picture analysis in euros, euro dollar. So we saw a three wave pattern to the upside. Basically, three wave patterns dictate corrective sequences. So we had a three wave pattern to the upside. This caused the left shoulder and the head. Then we came back to the neckline. Again, a three wave pattern to the upside. We spiked through 61.8%, rejected. We then got a bearish outside week. Now these are for me, I use them as signal candles. I'm not a great fan of dojis. Insider armies basically show you investor indecision. So inside candles, when they're inside the previous candles range, basically show investor indecision. An outside bar is different to a bearish engulfing bar. An outside bar takes out the whole range of the previous candle, and I think that's probably the strongest candle, or two candle formation that you can get. The strongest candle formation is probably a morning or an evening star, but a bearish outside candle formation basically shows you that the bulls were still in control this week, okay, the week that we're talking about here, and then that sentiment completely reversed when the dollar index hit that 80.58 level, and we had strong selling, and that basically reversed the sentiment, and it's sentiment that we're trying to trade with, especially when we're looking at big picture analysis. Okay, so this is the first leg down, three wave correction. Okay, two places or two areas to note here. And you've got to keep an eye on that dollar index, obviously. Okay, there's two scenarios. One is that we see a choppy three wave correction lower, and again he's got to break the neckline, and that would take us down to 124.50. I think the favourite scenario, just on the basis of how far the dollar can go, is a head and shoulders formation, and that, based on the break of 127.50 level, will take this major currency pair down to around about 17.50. Short-term analysis, because okay, it's nice to know what potentially is going to happen in 6 months' time, and time lag, I think we probably would be looking at least to the end of this year. But that's when we break down the time frames. Okay, let's just get off that one. So similar to dollar index. Okay, this was a move up, and then this linked in with that dollar index ABCD formation. So we saw AB, we then saw a small rising wedge on the intraday chart, okay, which broke to the downside, gave us a decent signal, also all the way down to 130. And 130 was the prime target level. And we actually looked at some one-touch options for hitting that 130 level. Now, what do we see? Well, now we see really sideward trading, but the downward legs have been quite aggressive. This first pullback here was 23.6% of this decline. Okay, very rarely do we see 23.6% holding. Okay, it's one of the fib levels, probably the weakest of the fib levels. Okay, so what we've been looking to do, and this is only in the short term, okay, is to play the intraday trades. There's some very strong resistance coming in between 131.07 and 131.15 that should be noted. What happened this morning was a decent ABCD formation up to 78.6%. Okay, so 78 was actually our target level this morning, and we made a 77.5 high, I believe. The picture from is this. Is that a basing on the 4 hour for a break to the upside so it can be sold? Yes, basically. I think if you're looking to play trend plays, then you should be selling into rallies. I don't think that 131.07 will be surpassed. I think it's a very, very good area for long-term players to get short and play it down to the neckline, and then probably increase your trade, or increase your trade size for a break there to take it down to that 117.50 level. Short-term players, I know it's a wide range, but until we get a decent breakout here to the downside, really, then I think we're going to see some choppy trading. So inside legs, excuse me, I'm losing my voice. If inside legs, we've got these. Okay, 1, 2, 3. Okay, then down aggressively again, then 1, 2, 3. But this didn't take out the top of this leg here. Okay, so if you're just looking for corrective sequences, and also looking at time span, this only took a day and a half to form, when that whole leg lower took 2 weeks. Okay, so realistically and consciously, even though I'm still a bear overall, I think there's still ample scope for some buying in this currency pair before the next leg lower. If we look to a lower leg, okay, so it comes in. We've got some of our big spoke resistance at 131.07, and this leg comes in at 131.08. It's very rarely that both of the levels line up so well. And even though this aggressive downward move that we've seen today looks very strong, if we look at a daily chart, just going to drop one in. And this is not, we're not using any oscillators, indicators, etc. Okay, on this analysis. Notice how we've got that bearish engulfing off the top. You see what I'm saying about how strong these signals can be. When you get a bearish engulfing or a bullish engulfing, or outside bar I should say, then downside pressure is normally very strong. What I would say, if you trade outside bars, then my tendency is, if I see an outside bar and it's at a level where I think there's serious amounts of support and resistance, I will trade small, or I'll open up a small position at the close of that outside bar, as opposed to an engulfing candle. If I see an engulfing candle and it's at a decent area of support and resistance, then I'll use a Marabuzo level to get my entry, because for me they're just not as strong. Okay, so an outside bar, I'll get in, and then if it moves back up a little bit, I'll add into my short position. If I've got a bearish outside bar, I won't open my short position until I've played the Marabuzo level. And you notice here, outside bar, okay, it's not, I think it's explained quite well actually. This is an outside bar, okay, and then buying at the open of the next candle gives you a decent leg up. This here is a bullish engulfing, okay, it's not an outside bar. And if you note the Marabuzo level, which is basically half the candle, okay, so just pull it down a little bit, up there, okay, really held well as support. So buying the dip at the Marabuzo played out well. Whereas if you'd waited for the Marabuzo on this candle here, you've missed the path basically. So going back what I was saying earlier, because I digress all the time, is the fact that even though we've seen some selling today, okay, we haven't engulfed yesterday's candle, okay. So on a big picture analysis, there's still scope, mild scope for some upside pressure before we get that next aggressive down move. Any questions about euro dollar? No. Okay. Cable. Let's just look at the bigger picture. New York will take 130. I think it'll be opposite. We'll wait and see. I really, until I start selling into rallies again, then I'm still short from. I've got short cable at 157.50. I'm still short of that. And medium-term bias is still for lower levels. But until it breaks that 130 and then holds below 130, I prefer to play a higher range in euro dollar as it's from where price action is at the moment. A break of 130 to the downside, I'll then look to sell into rallies at 130 and play decent risk reward on the downside. But for me at the moment, intraday trade, like I said, we bought the 7 o'clock open. We had a 78 handle to try and get out. Now it's a bit more mixed really. Until, you know, if euro dollar can engulf outside and post an outside day today, then I think it will break 130 and aggressively lower. If it can't break that 130 today, then I think 130, 107 look for selling rallies basically. Cable. Okay, we had a decent formation here. I'm not going to go too much into past history, but this was actually 78.6% of this move, and it gave us a decent lick to the upside. It was a bullish Gartley formation. Target level 61.8% of the whole move, and I think it literally just reached it. We were basically looking at ABCD formation. We were looking at 70.80, which was the reverse trend line. It was also a full ABCD formation was at 158 the figure. We also had cloud top, so we triggered our short 157.50. I'll be perfectly honest with you, it was more luck than judgment, as I said, because it was stepping inside of our trigger levels. So we were pretty lucky to get short on the nose there. Again, same scenario that we've seen with euro dollar, in the fact that we've had an outside week. Okay, if you'd waited for the Mabuzo level, you wouldn't have got it. It was only a small retracement to the upside, and then we've seen this further selling. We've got some trend line support. Not sure where it comes in actually. Around about 150.64. Breaking it down. So here was our prime target. You see 157.89, basically lined up with an ABCD formation, etc., etc., etc. Small bounce off the cloud. So that's what I was talking about. Very mild dip buying that we got off the top of the cloud. One thing that should be noticed on this breakout in sterling dollar is the fact that if you do look at Ishimoku cloud trading, is basically the fact that the Zen lines aren't in order, and by that I mean reasonable on Ishimoku. For a positive breakout, is that the right word? For a true breakout, because I don't want you to think it's bullish. For a true breakout of an Ishimoku cloud, the Z lines have to be in order, and the lagging line has to be below price action, 26 candles before the breakout. Okay, so here they basically work like moving averages, and the Z lines have only just crossed. Okay, so basically on the breakout, and we have a small retest, but it's a false breakout to the downside. And again, I think we might see a little bit more sterling dollar buying before we get the next sell-off. And if you count back the days, okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. The Zen line is above price action. Okay, 26 periods before. Okay, so that also dictates that this could well be a false breakout, and we might get some a reversal, either up to the reverse the previous cloud, or more often than not, the top of the cloud cover. Okay, so there is scope for cable to retrace slightly, but again, like I said, the medium-term bias is still to the downside. Any decent reversals I would look to sell into. Short time frames, Steve's last leg was down in 5, okay, and it's surpassed that. This gives it a little bit clearer. So medium-term bias is still to the downside with that lower trend line. Can't remember what level I said, 150.64, acting as some support. And intraday, just looking to sell into rallies. Can you just bear with me just 1 second? Okay, sorry. I've got a teenager who's off school today. Just one of the many reasons why I was. Dollar yen. Again, broken down through time frames. We saw obviously a decent rally up. This is the weekly chart in dollar yen. But you should note this previous high. If we look at the monthly candle, and I'll just change this into a monthly, we note the previous high, I should say. Okay, it failed to close the month above 101.43, so there was a spike basically through previous resistance of where we can form this channel formation. Going back to, I've got some trades on as well, which I'm trying to keep an eye on. Go back to the weekly chart. Okay, so obviously this area was noted as resistance, and then we have another weekly outside candle. Okay, not a bearish engulfing, but an outside bar. And we had strong selling from them, so we had 4 consecutive weeks of losses in dollar yen. My bias is for a larger free wave correction lower. Levels that I'm looking for in the long to medium term are 89.51, which is 50% pullback, and 86.16, and these line up pretty well. Okay, taking previous support levels, parallel support levels from this channel top. Okay, break it down again through time frames. Just hit 61.8% this morning. Let's just get rid of that. Okay, of the last sell-off. So an aggressive sell-off can be seen in 5 waves: 1, 2, 3, 4, 5, and then a 3-wave pattern higher. But I don't think this is finished yet. Today we're probably going to get limited price action, but I'm looking for a more aggressive move, sort of up towards sort of 101.25 and possibly even 101.50. If we take an ABCD formation, we've got resistance at 101.59, and then we've got a top or an ABCD target at 101.87. So what we're trying to do, pretty unsuccessfully this week, Okay, we're trying to buy into dips. Obviously, this being, as I said, a resistance level, so looking for mild pullbacks off the 61.8% fib to get long, to take us higher, and that yen reflection, if you like, is also seen in these other crosses, yen crosses, but obviously not as an aggressive leg higher in euro yen, because we're still expecting euro dollar to push to the downside. So obviously dollar yen would be the play if you're looking for an upward move, not euro yen. When will it get to 101.50? If you follow the line up, which I don't normally, but it looks to be working pretty well. 4th of July at 12:15. Like I said, I don't normally look at taking anything like that. I mean, I'd say probably towards the end of this week, beginning of next. So before non-farm payroll, probably. Aussie dollar. Now we had a 261.8% level that held for quite some time. It was around this, obviously this bouncing bar, if you like, this small upward move that we had, sort of week 10th of June. My bias is for more selling in Aussie dollar. I don't know if we'll get all the way down to this level, but if we do, then this is obviously a prime level to reverse. Bullish back formation seen at 84.08 to then take the pair all the way back up towards the figure. A better scenario, I think, in Aussie dollar, at least in the short term, this is the 261.8% fib level, is for the channel base, which comes in at 88.88, to be the next formidable target. A lot of the time, commodity currencies run through 261.8% and actually target 423.6%, which again is located at 84.70. So still a bearish bias. Still looking to sell into rallies. Intraday, I think there's ample scope for a larger correction. Breaking it down through time frames. Euro Aussie yen is 261.8%. This is causing in Aussie dollar. But Aussie yen has only made one corrective sequence higher, so again it dictates that we should see another corrective sequence before the next leg lower. So at the moment, I think this could well play out up towards this previous area of resistance, which is around about 93.50, before Aussie yen turns round to the downside and takes Aussie dollar with it. Any questions at all? Euro sterling. That's just an aggressive pop up, isn't it? Weekly, I mean the monthly picture, we're holding on trend at the moment. I still think there's scope for selling further down in what would be the last leg of an ABCD formation. we had a decent outside bar here. I can just pull it open. And we've not managed to break above the high of that, or the open of that week's candle, and or that month's candle, sorry. And I think as long as that level holds, which is 86.09, then I think the bias is still going to be to the downside. Breaking it down into a weekly. And I think we've got this channel on here, and it's not going to let me put it on. I don't know why. Okay, so this basically being the channel, and I'll look for that to form a flag, a break of the low, which is around about 84, the figure I think, and then a move down towards this level, 50 to 61.8%, and then a watch price action around there to dictate whether or not we're going to get a larger sell-off. Okay, any questions at all? I just been told we've run out of time. Any questions? No? Okay, well, thank you for attending again. I apologise for my bad timing again, and good luck with your trading, and I hope to see you all again soon. Okay, thank you. Bye now.